What's up everyone, it's Caddy with MoneyVest. So markets here pulling back just about slightly here, 25 basis points, with the S&P just under 5,300 and the NASDAQ trading just under 16,700. The Dow Jones did achieve a new all-time high of over 40,000 points, and then of course rotating back lower to trade back down to under 39,000 points here on the day. So we got lots to discuss. Jamie Dimon coming out with some comments here and why he's worried about the U.S. economy, and the markets are rallying on quote-unquote happy talks in the market. And of course, we do have our continued discussion with inflation. We did have a lot of really interesting comments on the U.S. economy in our Discord and our community here from a lot of other members. Kind of wanted to share the perspective there as well. As always, if you enjoy this video and find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. And again, links to our Discord and Patreon is going to be down below. A couple more weeks left if you want to take advantage of that 16% annual discount, and the beta launch for our MoneyVest platforms most likely going to happen sometime in June, and that will be available for all the existing members at a discounted pricing. And eventually we're going to be adding more and more features and more upgrades over time, which you are going to have access to for free with all the new data points that we're going to be including in our platform. So you are going to be locked forever at that discounted pricing. So link's going to be down below. We'd love to have you on board. And of course, you get access to all the members only private videos, trading view charts, as well as my trade alerts as well. So this was the state of the market. Very, very flat basically on the day. So again, selling off a little bit here intraday of lower highs and lower lows. But again, NASDAQ here just down about 26 basis points, S&P 5,300, and the Dow Jones trading just under 39,900 on the day here. So new highs hold as disinflation resumes in the US. So we already know that inflation has been coming down. So there is some level of quote unquote disinflation in the US economy, and that simply means that the rate of increase is what is going down. It's not prices that are going down, it's the rate of increase that's going down on a year-over-year basis, and these are all the year-over-year changes in inflation. So in other words, 3.9% for average hourly earnings, 3.6% for core CPI, 2.8% for core PCE, and 3.1% for core PPI. So these are all the core measures, excluding for food and energy. And the Federal Reserve's target, of course, is down here at 2%. So we're slightly higher than what the Fed's target really is on a core basis. But like I said, prices for everything is at an all-time high. For most goods and services within the CPI basket, this is simply the year-over-year change. Now, Jamie Dimon, quote unquote, says that happy talk is driving markets higher as he maintains a cautious view. So Jamie Dimon of JP Morgan CEO Thursday said that happy talk is driving stocks higher, but that he's sticking to his view that the odds of a soft landing for the US economy are about half of what the market expects, and some of the optimism comes from high stock prices, lower credit spreads, and an uptick in deal making such as fixed income trading, as well as the hope that geopolitical upheaval won't hurt the economic growth here. Dimon said that he sees buoyant times being followed by unforeseen challenges on crisis, citing the example of the prosperity of 1972 that was followed by a year later by inflation and the energy crisis. He says, and I quote, "I'm worried. Stocks are very high. I think the chance of inflation staying higher, rates going up higher, are greater than people think. My view is whatever the world is pricing in for a soft landing, I think it's probably half of that." So that is quite an interesting tweet here. I'm going to repeat that. He says, and I quote, "I'm worried. The stocks are very high, and I think the chances of inflation staying higher, rates going up even higher, are greater than people think. And my view is whatever the world is pricing in for a soft landing, I think it's probably half of that." And I think that is kind of taking a very, very objective and very realistic approach, because as we already know, the markets are a swinging pendulum. As you will read in the book, The Most Important Thing by Howard Marks, they are quite literally a swinging pendulum, meaning that they go from being overvalued to being undervalued, right? So if there are two spots, there's one spot over here. So let's see if I can draw this here. So let's see. So if this right here is a pendulum, right? So it kind of swings between back and forth here from this to this level here, and that those two levels are basically nothing but over and undervalued times, right? So this right here is a pendulum kind of swinging back and forth. And over here, we've got undervalued, and over here, we've got overvalued. So these are the two sort of spectrums of the market within which this pendulum swings. And right now we are, of course, here, somewhere over here, where the markets are priced expensively. They are trading at a bit of a premium. Markets at an all-time high. Volatility is back lower. And then when you consider those things, it doesn't make for a big buying opportunity. Yesterday I mentioned that the MoneyVest index we talked about how patience is important for the prices to come down, and somebody commented on that video that what if the markets are up another 20% by the time the MoneyVest index comes down the next time. And that's totally fine. Like, that's okay. We're not talking about sitting out of this market and just being in cash. No, I'm already invested. Most of my money is invested in the stock market. This analysis that we do for when the pendulum swings to the undervalued level here to the leftmost side, and MoneyVest index is really low and the volatility is really high, is only for buying. It's only for buying and dollar cost averaging. That's the whole analysis. That's what we do. It's not for selling. And the reason for that is because markets can remain irrational on the higher side, on the overvalued side, far longer than they can stay undervalued and cheaper. I'll say that again. The markets can actually stay and hang out at these prices. The markets can stay and hang out at these levels at overvalued far longer than they can actually stay over here. Markets are only undervalued and cheap for a short period of time. They give us a short buying window, but they give us a very long window where they can stay higher for longer. They can stay expensive. They can stay overvalued for longer. And that is why it is a loser's game to try to time this and start selling when the markets seem to be overvalued or trading at a premium, because they can only become more overvalued and keep going higher than it is to time for a buying opportunity when they are undervalued. So I like to do this. This is what I prefer. This I don't, right? So that's why even in our MoneyVest index, if you come to this, you'll notice that this actually means buy, but this does not mean sell. And that is the whole idea, is that I can remain invested. I can stay invested in the market, take advantage of the fact that markets are going higher, and not do anything. And next time when the markets are back down, when we are seeing the MoneyVest index down at 2.2, 2.3, I can start dollar cost averaging. I can be a little bit more aggressive because I would understand the risk reward is far greater at these levels than it was over here at close to 4. So hope that makes sense, right? That's the whole idea behind why we do what we do, is like the whole analysis is built on this idea on risk and reward. And again, a lot of people, few people commented this yesterday that, while you're waiting for the index, MoneyVest index to come down, while you're waiting for the prices to come down, why do the markets keep pushing up 20%? Like, that's fine. That's okay. I'm invested. We stay invested long and allow for the markets to come back and let the prices come to you. Even if that means going up 20% from here and then pulling back 10%, that's fine. That's when we'll dollar cost average. That's when we'll start buying more aggressively. So overall, I would say the markets were, again, very flat. Some sectors up, some sectors down. I do have to catch up on some individual stock analysis. And this right here, again, is the entire sort of market. You'll notice on the day, consumer defensives pushing higher, communication services pushing higher. Every other sector was down. And in the last 1 week, of course, most sectors are green. Energy was down. In the last 1 month, again, most sectors are up for the S&P 500. So all 11 sectors are up in the last 1 month. We got orange juice pushing higher, lean hogs, gasoline, heating oil pushing higher, with palladium, coffee prices, lumber, sugar, cocoa prices also selling off. We got Bitcoin just a little bit over 65,000 and Ether just over 2,900 as well. So going back over to the markets of volatility here, at 12.41. So if I bring out the actual analysis on the VIX and where we are with that regard, on what percentile, we continue to show this as a very rare occurrence in the market. So if you come over to volatility summary, 12.97 percentile. So we're now in the 13th percentile for volatility. Very, very rare event for the VIX at 12.42. Again, anything below 13.95 puts us in the bottom 25 percentile on the VIX readings, and we just have to be super careful, because the moment it drops below 10, Right now it's under 12. The moment it drops below 10, that would in itself be an event which has only happened less than 1% of the times in the last 36, 37 years. So just think about that for a second and keep that in mind, because less than 1%, that's in itself is a very, very rare event for the markets and for the economy, for just equities in general, because we would be dealing with very, very low VIX values, and a potential spike could be on the horizon, of course, putting pressure on equities and putting pressure on the markets to potentially come down, see a little bit of a dip or a correction. So keep that in mind. When the VIX is low, it's time to go. It's time to look out below. And when the VIX is high, it's time to buy. So we've always talked about that. Now, coming over to the index here. So again, we're at 3.98. So we were as much as 3.99. So we're getting closer and closer to 4 and a little bit over 4, 4.1, 4.2. So this has been a very nice recovery back higher from its lows of 3. That's been, what, a 25% increase, or a little bit more than that. So 30% increase in the MoneyVest index from 3 to 4 in the last 1 month. And again, we're just patiently waiting for the next big buying opportunity, for the next big serious buying opportunity, for which I will update everybody. So the moment this drops down to 2.3, 2.2, 2.4, or sub 2, that would be, in my opinion, the best risk-reward trade-offs in the market. So coming over to crude oil, just consolidating sideways after the breakdown from this head and shoulders. We're trading sideways pretty much. Resistance is going to stay put at $80, $81 a barrel. And support level is going to stay put down to $73, $74 a barrel for crude oil. Talking a little bit about the markets now, NASDAQ continues to pretty much trade at an all-time high here. Broke out of its resistance yesterday, over 16,450s. And of course, we're pretty much at an all-time high right now. And then, of course, same thing is true for the S&P 500. Huge breakout above its resistance of 52, 5,300. And of course, we're starting to pull back a little bit. And that right there is going to be that support, because we did break out of its huge resistance for S&P 500. Going over to some individual stocks, starting with Apple. And Apple here has had a very strong month, up over 11% this month. And it's now coming back up to 190s. I mentioned this in our Discord, where 190s would be a fair price, would be a fair value to start looking at selling calls on Apple. And support level, of course, stays put down as low as 170s to as much as 153 for Apple, down to as low as 130 for this company as well. So a lot of consolidation sideways, and we'll continue to learn more about every quarter what is Warren Buffett doing with his Apple position moving forward. Is he buying more? Is he selling more? It's most likely going to be the latter, and then we'll continue to learn more about his take on the markets and the economy as well as time goes on. Amazon, on the other hand, seeing a bit of a pullback, so down about 1.2%. So big tech and Magnificent Seven, we did see some selling pressure for Meta, Amazon, and Microsoft. Continue to sell off. Amazon, Meta more specifically, down over 1%. Amazon down 1.2%. So resistance going to stay put at this double top 188, 189, and support level down as low as 171, kind of aligned with this higher low for Amazon as well, down to as low as 159 to as much as 143 for Amazon. Talking about Tesla, and Tesla here also just consolidating sideways. Resistance is going to stay put at 178. So this right here is going to be that level to watch for Tesla, and support level down as low as 150, 151 for Tesla as well. So that the green rectangle is going to be the most important area of support and demand for Tesla moving forward. And I will be looking at selling puts if and when it actually comes down to these prices, and resistance is going to stay put at $200, where I would be looking at selling calls. So very, very simple game plan for Tesla at the moment moving forward. And of course, resistance is going to stay put at roughly at $200 per share, support level in the 150s. Talking about NVIDIA, NVIDIA is reporting earnings next week, so resistance is going to stay put all the way up to 975. And again, call premiums are so freaking good on NVIDIA, because if you come down to where NVIDIA is now, especially when you kind of consider that it's leading up to earnings next week, 29 days out, June 14th for calls. If you go way out of the money, like even if you go to $1,000, you're making $4,000. That's 4%. If you go out to, let's say, $1,200, then you're making a little bit over $6,000. $5,000. That again is very, very good. Wait a minute. No, $545. Yeah, I was gonna say like 5,000 would be $50. Because I was wondering, like, if you go further out of the money, it should be less. It is less. $1,200, 545. So that's $545, not 5,000. So $545 for 1,200. That's about a 25% increase for the price from its current levels. That's a huge increase in market cap with a really low delta, and that's still pretty decent premium. Like, that's still pretty good premium. 1,400, or let's say 1,300, it's $227, and 1,400 is about $1 in premium here, which is still good if you consider how far out of the money it is. Like, I really do love the 1,100 to 1,050 strikes at $2,400 to as much as $1,480, so $1,500 with their low delta. I would be looking at $1,100 strikes for NVIDIA if I was, a big shareholder with over, a couple hundred shares, because 1,100 for NVIDIA would be another 16-17% increase, which is possible post earnings for the company, but the market cap would just be insane. I mean, they would be adding another, I don't know, like 400, 500 billion. They'd be reaching almost $3 trillion in market cap. That would be quite insane. So resistance is going to stay put at 975, and the support level is going to stay put at $906 going into earnings next week. AMD also having a very nice momentum higher, 1.8% higher. Resistance is going to stay put at 164, 165, all the way up to as much as 183. So those right there are going to be a couple levels to watch for AMD, and support level is going to stay put down at 150 for advanced micro devices. So those right there are going to be few levels to keep in mind for this stock here. PayPal, on the other hand, consolidating sideways, so resistance is going to stay for roughly at $65 to as much as $68 per share, so kind of aligned with this previous resistance for PayPal, and support level roughly at $56, $57, so very, very strong area of support here for PayPal at the moment, so very much still validating this higher high and higher low here. Visa, on the other hand, continues to pull back and get rejected here at around 282. So this right here is going to be that level of resistance where we are getting rejected, and support level is going to stay put at 265 for Visa. Meta, on the other hand, starting to pull back, but it's still within the context of this support and this area of demand for Meta, and resistance all the way up to 513 to 531. And again, we're just validating and consolidating sideways here at around 455 to 475 for Meta. Netflix, on the other hand, just also consolidating sideways. So we're seeing a lot of consolidation here for Netflix. Support level is going to stay put at $598, close to $600, with a resistance all the way up to $636, $637 for Netflix. And again, it kind of starts forming a little bit of a bull flag as well, and a lot of consolidation sideways here that's happening for Netflix. Google, on the other hand, continues to push higher, so pushing up another 90 basis points, breaking out of this resistance. We're going to go ahead and turn this level into a support for Google, and again, we've got a little bit of a gap to fill down to as low as this green rectangle as an area of support and demand for Google, sitting roughly in the 150s for this stock here. And Microsoft, continues to validate that support here in the 390s, pushing higher very nicely. Support level is going to stay put roughly at 417, with a resistance and a targets back up to 430. That's going to be the level to keep in mind at the moment for Microsoft. But again, a lot of them are trading at a valuation where I'm not comfortable adding or dollar cost averaging or buying at these prices. Enphase, within the context of this downtrend, still getting rejected at this lower high. Support level is going to stay put roughly at $106, $107 per share. And again, a much stronger support in the 90s for Enphase. And then finally, we come over to Costco, pushing out and breaking out to new all-time highs. Support level is going to be put over here now. It's been a very nice recovery for Costco from its lows of $703 back up to almost $800, 13.5% rally for Costco. But again, very overbought here. So RSI, MACD, and the L3 Banker Oscillator are quite overbought at the moment. So be careful, of course, with these prices and with this stock here at the moment. So hope you all enjoyed this video and found it helpful. The bottom line is that we've got, lots to kind of unpack next week with earnings. This week also with earnings. Of course, we had inflation numbers, and FOMC is going to be coming up very soon here in the new month. Again, the bottom line is that it's really important to practice patience in this type of market, because that's what it does. It kind of sucks up a lot of the liquidity that we have. And as I've always mentioned, it's all about risk and reward. And right now, unfortunately, the risk is a little bit more than where the reward is. Of course, last month, the risk reward was better because markets were lower and MoneyVest index was down at 3. But because it's moved higher by 30%, because the markets have recovered back to all-time highs, we're back to where we were earlier in the year, pretty much at all-time highs, with the risk reward not as great as when the prices are lower. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like and of course subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below if you're interested in joining us. And 16% annual discount available until the end of this month. So always happy investing. I'll see you all in the next video.